All right. Good afternoon, everybody. Let me make sure we are going live on Instagram and the rest of the platforms. It is Monday, September 8th. Surprise, Mackenzie Peterson's not here. She is at Future Proof, the conference in Southern California. I think they call it the Coachella of investment advisor conferences, independent investment advisor conferences. So she's down there with Eddie. Dan Carter Morris, one of our investment consultants, is down there with her as well. Hopefully enjoying some warm weather, hopefully having some good conversations, and hopefully helping us raise some assets in some of these ETFs. So I hope everybody's doing well. Just again, checking some of the technical things to make sure everything is working and I did it all correctly. I can get a little rusty at this. I see Stevie's comments. Hey, Stevie, how's it going? I didn't watch NFL that closely this weekend. I was traveling, but I want to say maybe, Stevie, I saw your team losing. Thanks for the thumbs up. So I don't know if I did see the end of the score of the Texans game or not, but I want to say at one point when I looked, they were behind. And of course, the Cowboys lost. And then, of course, the Green Bay, who we traded Micah Parsons off to, won. So everything is pretty much horrifying for me in the world of NFL sports. But all good. Traveling last week, I think I posted a few photos. I was in France. I've never been. Went out there for a friend's kid's wedding. So was able to spend 3 or 4 days in Paris, and then from there went to the south of France, Antibes. If that sounds familiar. The Texans look like crap. Oh, yeah, bummer. Probably first game rustiness, right? So then spent it in the southern part of France, Antibes, and then flew back home out of Nice, which is pretty much a funky airport. If you get a chance, pull it up on Google Maps with the satellite view. It just seems to be landfill they built out to stick an airport in right on the edge of the water. So it's pretty wild. It was interesting to go, especially Paris is such an old city, obviously an old country, a lot of history. So it was interesting to walk through a lot of areas where just a lot of crazy stuff in the world history had occurred. So what a beautiful city, seemingly beautiful country. I took the train from Paris to get to the south of France. So that was a solid 6-hour train ride on the TGV, which I guess is their high speed. So maybe it was 5 hours. That was high speed. So it was a long train ride. But that was pretty easy. So easy to get around, lots of cycling in that town, of which I tried. I rented one of those Uber Lime bikes. And was pedaling around, and that was a lot of fun. I rode up and down the Champs-Élysées. I'm pronouncing that right. And then if you're French and I'm not, I apologize for that. So that was fun. It was like I was in the Tour de France, but I was on a Lime rental bike with a little electronic power boost. That also helped me as well. But I did find, as I was trying to navigate the city a bit more on the bikes, while it's incredibly biking friendly, you just understanding where you're supposed to ride and not ride, and where some sections seem to split off. There's even some roads where you ride in the middle between cars that are passing in alternative directions. So I think only twice was I on the wrong side of the path where people were coming right at me, and took me a minute to figure out. And I'm sure they were shouting "crazy American" or something like that. But yeah, interesting city. Glad to have checked it off of my list. I don't know that getting to France was a high priority on my list, but it was a fun way to do it. Weddings are always fun. You get the chance to see, people be incredibly nice to each other, which I know sounds silly because it's a wedding, but it's nice. Like, everyone's in a great mood. I love weddings. People are happy. They're eating food. They're having some drinks. I love wedding cake. So I don't know. I really enjoy them. I was dancing, which is, there was video out there of that. It's pretty horrifying. You guys would be entertained by that. But a really good time and good wine. I should mention that, of course, right, in France. But not adult use cannabis. I checked that out, of course. And medical, it sounds like, on limited circumstances, but not adult use, which is some ways a bit surprising. I think they see themselves as the one of the first early democracies and freedom and all of that, and but apparently not for a plant. So that's unfortunate. But again, nice country, fun week. It is also crazy to keep up with things within the U.S. relative to the time zone changes. Um, but fun. And I'm still a bit jet lagged. I was up about 3 o'clock this morning, which I guess would have been 9ish their time. So I got to shake that loose a little bit. But markets look like they are. I need to pull them actually back up again. But I think markets looked strong this morning. I of course was actively watching cannabis stocks, and positive. I'm not sure I would say strong. S&P at 6,500, only up about 1/4%. Dow's basically flat. Nasdaq call it up 0.5%, and Russell 2000 is down a little bit. But I am of course happy to see some positivity in our favorite cannabis focused ETF, which maybe I will try to go um, without mentioning the ticker, so I don't have to pull this video. Boy, that would be easier, right? Um, so I'll just call it your favorite cannabis ETF, is showing some signs of positivity, but volatility, of course. It looked like, opening down and then jumped up and then up and down and then kind of down a little bit and then starting to head back up. So, it's volatile. I've been saying that constantly as of late, only because I've felt like, and we have seen a lot of, I don't know if it's headlines, but a lot of news, a lot of reports. I know some were under the impression we would get a Trump announcement about a week or so ago, and that didn't quite happen. Which I don't mind those things. I know some people get really upset that people share information that they receive from people that they feel are credible, and then pass that information along. Things just change, right? We saw that within the Schumer era. I have, again, on sort of high level confidence sources that, Schumer was saying all the right things and saying these things would get done and so on, and changed his mind. And it didn't get done for one reason or another that only he can probably best explain. But it wasn't that the information was bad. It was just the results and the steps that were promised that would be taken weren't taken. And I think that's no different than what you're seeing here. And I say that with just a slight asterisk or caveat, remembering that these are microcap stocks and they're easy to push around. And if you have a large account with a large following, and you have nefarious goals in mind, it's also not hard then to push things around a certain way. So again, not saying that that's happening. And again, I'm always appreciative of anybody who thinks they have good connections or insight into the administration and the White House, and sharing the insight that they have. I can say I hear lots of stuff behind the scenes that we just don't really share anymore, because just because it may not turn out to be true, and people have a high reliance and confidence on us, at least I think, if you follow us. And so we just want to be careful and mindful of that, more so probably than we were in the early days when we were, genuinely optimistic and getting, what I still believe was genuine feedback from sources that things would change, and they did not. So, yeah, I'm still sticking to my game plan of what I referred to as quarters 3, 4, and 5 for the administration to make changes. But I'm certainly hearing a lot of news swirling around this month. We're early in this month, so we'll see how it goes. It seems like there's so much going on in the world that anything can be derailed, anything can be delayed, something can pop up at the last minute. It's politics, unfortunately, and it's unfortunate that the cannabis industry gets caught up in that. But one step at a time, and hopefully we're going to see some good news sooner rather than later. But I'm definitely feeling good about the things that I'm hearing behind the scenes, and we'll see what happens from there. So that's the update there. Though the good news, I think you guys saw, and we were seeing it last week. I guess it's a bit more official now, of Curaleaf being added into the TSX. So that's great news. I didn't look at the actual weighting. I think I saw something floating around last week of roughly how many shares would need to be bought by indexes that follow that index, or funds that are index funds that follow that index. But even when you're a small position in an index, remember the funds may still optimize. So they might not hold as much or any. of a tiny stock that they think won't dramatically affect the performance of the index and its ability to track, and by not having one more stock in it, right, optimizing their approach to replicating the index, um, could save them some money. And when you're in a low cost index fund, that's what's important to them, is just saving cost in terms of implementing the strategy, right, and being able to track that index. So with that being said, though, it's going to be a stock that's going to move wildly, and I'm not sure what else you might find in that index that's going to consistently correlate as high. But again, probably because it's such a small weighting, that even a big move still has probably a small impact overall in the index. Um, there's no guarantee that all those shares will be bought. So keep that in mind as well, right? It's not a guarantee, as there are not many of those in anything about investing. Um, but good news, really good news, really good news. So I'm excited for them, and excited for Dan, who's been slowly increasing his weighting into that position. I know, much to the chagrin of fans of other of the top large cannabis companies, but both from that news and just it being a bit more liquid of a stock, still microcap, being on the exchange. So I think that's all good. And so we'll see if that reflects in performance results over time. And we'll go from there. I'm going to do a quick look at the comments. I did talk about France. Thanks for asking, Stevie. Hope that's Canada's. Oh, number one cannabis ETF. I thought that said Canada. Yes, we are very proud of that stat. We just would be more prouder if the negative performance numbers were positive. That would be way better. Gary is typing something here that says his JP Morgan account has, I won't mention the ticker, a breakdown of investments that shows BlackRock liquidity. It's just that the fund's not invested. No, Gary. So the reason why the money's in the BlackRock money market fund, I'd encourage you to go to that ETF's webpage on our website. And there's a link there around the holdings, I believe. And there's a link that says about the cash. And we describe, what's going on when you see all that cash in there. So odds are whoever JP Morgan is pulling the data from, Bloomberg or Thomson or something like that, they're sort of doing what I'd call sort of a dumb pull, and that, yes, there is cash in it. And yes, it's, at that percentage or more that you list there. But when you look at the overall investment strategy, you'll see that the fund, to get access to those plant touching stocks, uses derivatives, swaps, to get exposure specifically to that. And so when you have swaps, it's just a contract between the fund and the swap provider, and cash is moved as collateral. So the value of how those stocks move based on the amount that we have exposure to will move up and down. You'll see that reflected in the value of the portfolio, but we don't actually hold the shares. They're the ones that can hold the shares. They don't have to, but they can. And practically speaking, they do. And that's how they can ensure that they have the return stream that we expect to get, when things are working in the fund's favor. And then cash is moved back and forth. Really, it's just collateral for those contracts. So you'll see cash in the portfolio, which is a good thing. Cash provides some income to offset expenses in the fund, so that's nice. But keep in mind, some of the expenses, are the swaps themselves that have their own cost. Those swap providers don't do that for free. So they'll charge a couple things: commissions. They'll charge a percentage on the amount that's not collateralized, so the cash that we keep back. But then we can make interest on the amount that we are holding, within the portfolio. And so hopefully over time, well, I say two things. Over time, when that industry can get custody and listing, we'll be able to hold those shares directly. Even though, as concentrated as an industry this is where I would tell you to go look at some of the products that are built, for example, the leveraged single stock ETFs. You'll see that even though they're holding something like Tesla, right, but it's 2x or 3x Tesla or whatever it is, they hold very little, if any, of actual Tesla stock. They hold that in a swap, and they do that in part not because they can't hold it. You can of course hold Tesla stock, but they do it in part to meet some of the diversification requirements based on investment companies. So we would probably fall into the same situation. I think there's another ETF out there that only holds like the top 6 in terms of size cannabis company. They're a good example of one that will, never be able to go to just no swaps, right, based on the diversification rule. And I think we're kind of in the same boat. But we have more to work with because we invest up and down the call it capitalization spectrum, even though they're all micro caps in the cannabis industry. So yeah, I would say over time, once custody and uplisting happens, you'll see predominantly us holding all the shares, but not entirely. And so you'll always see that component of cash in there. So good question, Gary, and thanks for your interest in the product. We appreciate it. Shroom Sleep, I see you in there. Thumbs up. Thanks, man. So let me think of what else I'd talk about. It actually feels like it's been quiet, right? We've had the drama of the news from the cannabis space. Everyone kind of knows where that is. Again, I would say based on the rumors I'm hearing, not that I've seen on X, but just sort of behind the scenes, September feels like a strong month. With all that being said, I'm still sticking to my Q3, Q4, which is fourth quarter of this year, and what I'm calling Q5, which is really Q1 of 2026. I want to see the administration get something done. I think if they haven't gotten something done, then I'd have a couple of concerns, which is one, nothing happens before the midterms, or two, maybe something still could happen before midterms, but I'll feel less good about it, I guess, in some weird way, in that I hate for them to use it as a mechanism for votes. Now, granted, they're politicians and everything they do is a mechanism to leverage votes. So I get that part. But that's kind of, based on the things I've heard, based on the mindset, based on getting kicked in the teeth, several times in the last administration. That's my time frame. But, fingers crossed for a good September. We'll see how it goes. So I think that's all there is to share on that. Until then, keep in mind, we'll see a lot of volatility. It was nice to see some of the cash flow, a lot of cash flow really come into the fund, and a lot of activity around the underlying shares. Green Thumb's obviously been busy with what they're doing relative to sort of almost what looks to be a reverse merger with Agrify. So lots of changes in the industry. A lot more volatility. Be careful with how you invest. Position sizing matters. If you want to be a trader, be a trader. If you want to be a long-term investor, consider dollar cost averaging. But yeah, it'll still be a volatile space. And I think it's also, again, one of those spaces too, where keep in mind, hopefully with good news, things will pop on news, but it still takes a while to implement things. As we've seen with these banks who've been rushing over the last couple of years to have a cannabis policy. They'll need to update those cannabis policies. They'll need to think about their compliance programs around these companies from a listing perspective. I know they're talking about it and working on those things now, but it takes time to implement those things and rule updates and things like that. So even though hopefully, knock on wood, soon we'll get some good news. Soon, I hate to use that word. But also keep in mind too, it'll take a while for things to implement. So we'll see how that goes. Indonesia and the Philippines, somewhere out there is opening to cannabis sales. That's good. Yeah, good. Global reform will be great. Global reform will be great, and this really could be one of the areas where maybe the U.S. can dominate. Right? I know people use the terms like tequila in Mexico or agave in Mexico, maybe, and champagne from France, and U.S. cannabis, or maybe specifically California, could be fantastic. Global brand product, medicine. So yeah, I hope those things do open up. I hope that the current administration, who seems very business, very trade focused, could see that as an opportunity, and just really, beyond the medical and adult use of things, right? The textile, the industrial aspects of this plant can create really amazing opportunities and check a box in quite a few areas, especially as it relates to trying to do more things to be friendly to the climate and what it takes to grow these plants versus other commodities that are used across, different industrial categories, whether it's textile or construction and things like that. So really cool what seems to be evolving for the space. But holy cow, we need to get some politicians in place that really understand that a lot more. So yeah, so that's exciting. The market's been really interesting too this year. S&P, I think, is up 10% year to date, but keep in mind, I think at its lows in April, it was around 5,000 and now it's 6,500. 10% in a year is a good number. And we're doing that now here, at the beginning of September. Just go to cash and take, if you've been in the S&P 500 at least, and take the rest of the year off and have a really nice year. I guess we'll see how things continue to go. I do feel like we're starting to feel the rumblings of the impact of the tariffs and what still continues to go on around all things tariffs and trade. Um, Energy, I think, is working well in terms of price reduction, but so many other things are expensive. Healthcare is expensive. Housing is still expensive. I'd argue, I don't know what you'd call it, skilled services are still expensive. Plumbing, electrical, heating, all those things. We certainly can talk about, the heating and air conditioning, ventilation industry. Um, so I think that makes it tough, right, on consumers. It makes it tough on the middle class. It makes it tough on anything certainly below the middle class. I don't know that we've seen labor rates rising as much, though. As I read the headlines around all things, ICE and immigration and people that are here illegally and working, I think we'll see a bit of a ripple effect from some of this. And I don't know what that will look like, but one of the things that it could look like um, is more employment that's needed, right, from people that are here legally or actual citizens. If they're continuing to just seemingly broaden the scope of where they're looking for and picking up people that are here in the country illegally. I saw the Hyundai plant news. Um, so what would that mean? I don't know. But I think one, they got to find workers, right? So these businesses that are losing some of these workers need to find some. They probably need to find some legal workers, and they may need to pay a little bit more, to attract that help. So we'll see how that goes. That could have a positive effect in an environment where, again, prices of other things that we are importing are rising. And then if you couple that or lay it over a potential interest rate cut, we'll see how all of that goes. I think that's coming one way or another, right? It either comes with Powell as chair of the Fed, or certainly whoever is handpicked to get that role next year. I think early next year. I think will certainly be one of the first items on their agenda, I am sure. So that will probably help lowering the cost of a lot of different things, from obviously your credit card bills to your house payments and interest on loans. So that could be strong. It's never so great for older people who are trying to save and need to live off of fixed income. But those people are also seemingly and thankfully investing on the backs of strongest market we've seen in the history of our markets. All-time highs, basically, at or near. So how long will it continue? I don't know, but it does seem to be like we can be entering some large growth renaissance. You hear what these companies are talking about investing in jobs and in production in the U.S. Not sure where we're going to get all these people to work on these jobs, but hopefully, again, that's our politicians working on just a real plan to get people in here. Good, hardworking, honest, smart people to want to move to the U.S. I think there's plenty of people out there that want to. The rules should be easier for that to happen and more clear. And it takes politicians focused on doing their job, which is fixing those things. So we'll see. Hopefully that's not too political of a rant. It's hopefully a political rant. We want to see lots of awesome people come to the U.S. And if they can come here and have some fantastic jobs waiting for them, on all different levels, that would be awesome too. So, and we'll see that reflected in a lot of the things that we focus in on from an investment product perspective, right? Our restaurants industry, right? Without giving specific tickers, and, our hotel industry, and then, the heating and ventilation industry, right? We have these themes that you should check out on our website that focus in, I think, on a lot of these areas that can be beneficiaries of what maybe is hopefully a next wave of growth for the U.S. But we'll see. We'll see how that goes. Just checking the comments again. You're worried about PE average being at valuations higher than historic values. I don't know. I think so, right? I think when you look at we have a product that focuses in on the restaurant industry, for example, and we have one that focuses in on the vices industry. I'll look at those as an example. And if you look at just not even maybe saying the performance of the product per se, right, but just look at the category, they've seemingly kept up with the broader market, with the S&P. And so if you can do that on what would what has kind of been, and this is where it'll get into your comment a little bit, on what's kind of been a FANG or tech or Mag 7 growth driven market, right? Those stocks are the predominant weightings in that index of the S&P 500, and they're driving most of the growth in that index. And I would say that up until, maybe sort of that turn of the election and the beginning of this year when we saw, S&P at, let's call it 58 or 59 or 6,000 dropping down to 5,000. You saw a reassessment, of that PE expectation on those stock prices. So could you see that again? You certainly can. Interest rates not lowering might cause a readjustment there. Certainly, interest rates lowering might say, "Oh, party's still on." Absolutely. So yeah, I think it can be challenging. But I would say at a high level, not specific to any particular stock, the industries that seemingly are commanding the highest PEs are seemingly the ones that are demonstrating the highest growth opportunities, right? NVIDIA seemingly cannot make enough chips to the point where, now the US is seemingly investing in, competitor chip maker. In Intel, and you have the announcement I think from Elon Musk as they are building some of their own chips, right? So they're just creating their own product for them to use themselves as opposed to buying from Nvidia, who can't sell them chips fast enough. So when does all that slow down and when does it stop? I don't know. And then the ripple effects, which I've been on the show, I know for sure, with McKinsey, and talking about the ramifications of AI and automation and robotics. And maybe that does speak to where some of these, I don't know if you call them entry level jobs, but manufacturing lines, produce picking, box moving, ride hailing, things will come from, right? You don't have to have people or as many people doing some of the things that you used to have them do. And it's crazy. I saw a machine that was, I forgot what it was sorting. I think it was tomatoes or something. And it was coming off a conveyor belt and through whatever optical resolution or identification or whatever, something would just spot a tomato and knock it into a bin. And so all this stuff is falling off of this conveyor belt, and it's just hitting all the tomatoes to go right into the bin that wants to capture them in. And then a cart moves the box of tomatoes away, after it hits a certain weight or a size or something. And so you think about the automation there. I've seen some of that. This was a year ago, actually. I had a chance to go with Dan. We were out in Napa having some fun at some of the vineyards, and they were showing some great collecting automation tools. So, less people out there just carrying the baskets or the bags or the things they're pushing around, and more getting a machine to do it. And it can work all night and all day, and it just needs to be recharged and all those things. So, man, we're going to see a lot of efficiencies. And so maybe you do get to an environment where you don't need, quite as many people as you once did to get all of these things done. I've definitely been watching. I've only really, I think I've ridden in a Waymo once, and it was a long time ago. And but just watching that a little bit more, watching what Robotaxi is doing in Tesla, and then having needed to take a bunch of Ubers when I was in France last week, which it's awesome that something like that is global, right? So one app can take care of you anywhere. But watching some of the comments and the people using the Tesla Robotaxi, and then knowing some of my own experience, somebody in my last trip to the airport, which maybe they knew that was the time to try to take advantage of you. I was charged almost a 20 euro wait fee. And I was like, what? I was standing right outside when the car pulled up. So I don't know how that got on there, right? Except whoever was driving pushed that button and seemingly wanted to charge that fee. So, hopefully there's less of things like that. In the robo taxi ride sharing stuff, even just simple stuff like, and again, I'm probably weird about this, but you set your settings, and I like a colder temperature in the car, and I think it's quiet and cold is the option I pick. 'Cause I'm usually just on my phone or doing something. I'm not a big chatter in the car. And so I got very little of that. No one cares what you put on your settings. And so I thought, oh, Robotaxi will fix this too. So yeah. So it's interesting what's going to be happening there. So, but the markets, seem good. They're still high, but you could easily see a lot of headlines. Certainly, hopefully, uh, some peace between Russia and Ukraine. I don't know that I see any other sort of whatever geopolitical skirmish that is quite as big as that one. I mean, I obviously, what's going on in the Middle East is challenging, and there's seemingly constant threats around, the Asia Pacific area, around China and Taiwan. But, Russia and Ukraine seems to be the biggest one by far. If you can get some resolution there, um, again, I'm not sure that I agree with lowering rates, but if you lowered rates, and if these companies start, putting shovels into the grounds with all these, 20 and 50 and $100 billion promises they're making the administration, which that's been funny to watch too. Just people coming into the office and be like, what number do you want me to tell them? All right, it's 50 billion, it's 50 trillion. Um, so seeing real money spent to develop and manufacture those things in the U.S. will be interesting. And I'm still in the camp. I used to talk about this a little bit too, about how it wouldn't surprise me over time. You could see a lot of manufacturing sort of move up and down this sort of South America, North American corridor, as opposed to putting things on boats and shipping them, overseas from China. Especially when you think about, automation and trucks and the Tesla semi or whoever else is making EV semis that can take manufacturing day and night, up and down. It could be trained, but it doesn't have to be trained. Now the trucks can go anywhere. And we're still not quite there to, full self-driving, but pretty close. You could easily do what they call, I think, last mile, whatever, takeover, right? Meaning automation on the highways, getting it from, cheap labor sources to high paying consumers, and putting on trucks that will drive themselves and charge themselves on the highway system on major roadways. And then, about a mile out on the city, might need to pull over and have a driver step in and get it all the way in to wherever it needs to get to. But man, you could just see a lot of efficiencies, a lot of automation, a lot of energy renewal, things like that being used to get those things done. So we'll see how that goes. At the end of the day, you're still just trying to pick the right manager or pick the right stocks. That's always going to be a challenge, but for those that pick some of our products, we appreciate you. Yep, Stevie, I see your comments in there. Thank you. Oh yeah, we should talk about psychedelics. That's definitely one that also feels like, it's been getting good news, continuing to get some good news. I know we had some changes recently at Cybin that at least seemingly from the market reaction was positive. So even that's an interesting and emerging category. So much going on. And hopefully it's been great for investors in a lot of different categories, right? It was for a while in cannabis and then not, and now maybe a little bit again. Psychedelics, the same thing, right? It was for a really little while, not very long at all. And then it just seemed to be a steady decline. And then that one, I think since the election has been, great. So again, sometimes it's about timing or sometimes it's about your approach. So I think that is the bulk of what I have. Where is it? 12:33. I wasn't sure I had 30 minutes of stuff to talk about. We'll get some updates, hopefully, from Eddie and McKinsey out at Future Proof and Dan. So hopefully they will be posting some content out on the X or other areas, but probably X, and letting us know what's going on out there. They'll be back later on this week. We've got people converging on the office this week for a board meeting. We have quarterly board meetings. We have to deal with a lot of regulatory and compliance things for the ETFs and their fund trusts. So it's always good to have people in town for that. And, for those of you that are parents and either have kids off to school or college, like myself, you're in that zone now. Everyone should be off and back in school. And, depending on what your situation is at home, I'm an empty nester now. So that gives me lots of free time to torture you guys on the internet every once in a while. So, all right, on that note, I'll check in and post some things later. I'll bug McKinsey to shoot some video and show us what's going on out there. But that's it. Thanks for tuning in. I appreciate it. Looks like we had a decent turnout today. The regulars, Brain Dead, Stevie, Shroom Sleep, thanks for watching. I appreciate it. And thanks for tuning in regularly. And again, for everyone that uses our products or talks about them or mentions them, we appreciate it. Everybody works really hard here um, to build some good stuff. Everyone's trying hard. We actually just added a new employee. So we're excited to grow a little bit. So yeah, we couldn't do it without your support. So we appreciate it. You guys enjoy the rest of your Monday. I got to make sure I turn all these things off appropriately or I will get in big trouble. And I think I did do this without mentioning any tickers, even though Stevie might be in compliance trouble. Just kidding, Stevie. You're not in compliance trouble. All right. I think that's it, guys. Thank you.
Before investing, carefully consider the investment objectives, risks, charges, and expenses found in the prospectus, available at advisorshares.com.